And welcome to another episode of Business in the Know. Today we're talking about the important stuff, small business money through the PPP program. And because we're talking about things that is data heavy, all about finance and involved in banking, three areas that I know very little about, I'd like my co-host, Paul Benton of Delight Digital, to introduce our guests today. Hello, Paul.
Good morning, Mike. We are joined by two awesome guests today, Wim Kees van Hout and Frank Ballesteri. Frank is a CPA with the Sensiba Sanfilippo accounting firm, and Wim Kees is a senior banker at Bank of Marin. Both of them are experts. They have worked feverishly in the first round of PPP, and there are few, if any, who know more about PPP than they do. So gentlemen, how about we just jump right in? And when can a business owner start applying for forgiveness, and when should they do so?
Well, good morning, Paul, and good morning, Mike. Thank you for having us on. It's been quite a ride so far, as you know. PPP is a very complex program, but in its principle, it's pretty easy. One of the things I would say about when can you apply for the new version of PPP, you may know that there was an initial version. Now there's a attempt at getting a second version that it's currently on the president's desk as we speak. Hopefully that will be signed soon. And what I would say is a general recommendation to folks who are looking, business owners who are looking to avail themselves of this program is to apply soon for the new money as soon as it's available. As far as the forgiveness goes for the original round, which is the most important thing right now for most folks, while there are a lot of uncertainties, what is not uncertain is the period for which you're asking for forgiveness is the period that's just past us. Basically the past 24 weeks, the second half of 2020. And since it's just past us, it's probably a good idea to prepare your application for forgiveness now, get all the reports that are fresh in your mind, that are fresh on your desk, get it all into a system now, because even if there's automatic forgiveness for certain loans, and that's going to be under $150,000, you will still need to be able to show proof of what you've spent the funds on if and when the SBA comes and knocks on your door. So it's a good idea to get your application ready, get your supporting documentation ready, get it saved on your systems, get it archived, and you don't need to actually apply for forgiveness until you're ready to do so, until your CPA tells you perhaps it's the right time to do so, but get the stuff ready now as it's fresh in your mind.
So a lot of business owners are going to be wondering, if one applies twice, do you have two separate forgiveness applications, or are you going to have a consolidated single one?
No, if you're applying for the second round of PPP, which is now coming, assuming it's going to be passed and signed by the president, then it will be two separate applications. So you'll have an application you put in say April, May, June timeframe for the first round. You now will put an application in for the second round, and those are two completely separate applications. They will not be bundled up together. So if you are, for instance, under that $150,000 level twice, you're going to twice benefit from the semi-automatic forgiveness of any loans 150,000 and under.
And that's actually raises the question, is it a blanket forgiveness under 150? There's talk of that, but I understood that there is a short form under 150 and a long form above 150. Frank, maybe you can jump in and tell us which is the form.
Sure. There are multiple forms, which makes it just a little bit more confusing. But from what we understand and what's written into the current bill that's on the president's desk is for loans that are 150,000 and under, it will be just signing a single page that indicates what your loan amount was, and then did you spend that money, and you'll sign that, and that will get you forgiveness. So you're not supposed to need to supply any more information other than that. Now, there's also an EZ form if you have not had any reductions in headcount or reductions in pay that's available once you get above that $150,000 level. And for a lot of companies, that's going to be the right form to fill out. The long form is only for people and companies that have had either reductions in headcount or reductions in pay. And that one's a little more tricky to fill out because there's a separate worksheet that you need to do for that one.
And actually on that topic, if you've had a reduction in either pay or headcount, is the operative factor tied to a specific individual, or is it tied to full-time equivalent employee? In other words, what happens if somebody didn't want to come back for whatever reason, or you parted ways for whatever reason? Does that person's name play a role?
So I'll speak to the first part of that, and I'll hand over to Frank. It is not tied to an individual. Okay, it's tied to a general number of folks. It's tied to FTE, but it's not tied to an individual. So if an individual leaves for whatever reason, if you've laid them off and you get them back, that's fine. If you don't get them back, but you hire somebody else, that's fine too. That will keep your numbers the same. So the objective of the PPP program, which if you remember is the Paycheck Protection Program, is to try and induce business owners to keep their staff on staff, because people are losing their jobs left, right, and center as their revenues decrease, because the economy is where it is. And so with the importance of the PPP focus, there was a tie to how many people you keep on staff. And the idea was that if you let people go, you would get less forgiveness. That's kind of gone by the wayside a little bit, in the sense that since the original PPP program was for an 8-week period and was then extended to 24 weeks, you can incur way more payroll costs in 24 weeks, obviously, than you can in 8 weeks. So even if you slim down a little bit, you would still have enough payroll to cover all the forgiveness that you need. And perhaps, Frank, you can speak to a little bit more in detail.
Sure. This is where high school algebra comes back into play. So if you're ever wondering where high school algebra is going to be beneficial, it's right here. So like Vimke said, the original program was for 2.5 times your average monthly salaries. And if we extend it out to 24 weeks, by and large, most companies are going to get to full forgiveness. And that's with just payroll alone. And that's really been the best advice that we've been able to give companies, is focus on payroll. It's the least amount of documentation and in the complete spirit of the program. And back to the concept of employees. So if an employee leaves on their own accord, it's not going to be a detriment to the company. But if you lay people off, then it will. So you have to look at the nature of why people left. So if they were fired for cause, that doesn't impact you. But if you laid them off, it certainly does. And, extending it to that 24-week period should get most companies to full forgiveness. With the companies that I've been dealing with, we had one that cut staff down to about 50%, and they're struggling to get to full forgiveness. But I think by and large, if you're at that 60 to 65% and up of the full-time equivalents of where you were before, you should be okay to get to full forgiveness. And really, that's what everybody wants here. The bankers want it, the government wants it. It's really the intent of the program. It's just we've got some hurdles we've got to get over, and we have to keep people honest as we go through this.
And just to be clear, the moment at which your expenses start counting towards forgiveness is the moment your PPP loan was originally dispersed. So on the day that your loan was dispersed is when your quote unquote covered period, as it's called under the PPP program, starts. And that's what's now automatically 24 weeks for any first phase PPP recipient. And so 24 weeks, you should be able to collect enough expenses to pretty much fill your entire bucket of PPP loan so you can ask for full forgiveness. I want to have one other thing I want to just say briefly about everything we're telling you today. Just as a caveat, this is a very changeable program. It's been changing all the way through. It's been changed many times. I want to just clarify that the things we're discussing today, you need to seek advice from your own CPA and your own advisors if you are looking at this program and looking for your particular circumstance. We are not saying this as a way of you relying on our word for all of this, because there's a lot of different components of the PPP program that are really intricate and have an individual focus on things that might not work in your particular case. So we cannot give you any tax advice here that you should rely on. We cannot give you any expert advice. We're basically giving you our impression. Bank of Marin is not on the hook here, if you will. We're clearly looking at providing the information as a service to folks, but you do need to do your own homework and know how it affects you personally.
Right. And just to put a point on that, let's be really clear. This is changing so much that we woke up this morning, and maybe it's going to be a little bit more changed by lunchtime. So it is Wednesday, the 23rd of December at 9:30 in the morning. That's where we are. We'll see where we go. But this is a great track to run on. Thanks a lot, guys, for
Sure.
the possibilities. Theoretically we're going to stay on this road forward. So there's Paul, I think there's a couple more topics we might be able, a couple more ideas you might have.
Yeah, sure, Mike. This has been really fascinating. I can certainly say that when I wrote our application, keeping up with the SBA was exasperating. And what was also extraordinary is when the original CARES Act passed and you read the original SBA circular, which was 24 pages, they had an extraordinary sentence in there that said that the Treasury Secretary, together with the SBA administrator, have chosen a different route from Congress. That's a paraphrase, but I think it's in there. And so just because the law, it hasn't even been passed yet, once it does get passed, the SBA technically could rewrite it to some extent. So we still don't know what the new legislation is going to be.
That's correct. And in fact, they have 15 days, I believe, Frank, correct me if I'm wrong, from the moment that it gets passed and signed into law to issue guidance, which is thankfully a lot faster than the original CARES Act was enacted.
Yeah, that's correct.
Guidance, right?
Another theme is that the original PPP application was not personally guaranteed. Do we know if the second PPP application will be personally guaranteed? And then, even if there isn't a personal guarantee, what do we think the risk could be if you get into if you fail to repay the loan? Do we have any insight in that?
So it is not personally guaranteed. In fact, the whole program is set up as a government guaranteed program. So in other countries, they do this differently. You apply directly to the government and you get funds directly from the government. In our country, we decided that it was a good idea to do this through banks to reach as many business owners as quickly as possible. Actually, it was a great idea in many ways in its principle. There is no personal guarantee for the second round either. As regards to the second part of your question, Paul, there is definitely some risk, if you will, personally, if you say things that are not true, or if you represent things that are not correct, or if you willfully misrepresent things, then the government can certainly come after you personally. That's not something that banks can do. So the loan itself is an unguaranteed loan. The bank will not be able to come after you as a business owner. But the SBA may decide that if you misrepresent something, they could come after you. So that's also the importance of doing all that work now while it's fresh in your mind and documenting it, having it ready in your archive. Then you can really prove, hey, look, this is all the stuff I just got. I based all of my application on information that I have right here. That will basically protect you from that potential threat.
So let me ask just a couple more questions, and this is very technical. So for the second PPP loan that one might get, you have to show a 25% gross revenue decline in at least one quarter 2020 over 2019. The highly technical question is that a standard quarter or is that a rolling quarter? That is to say, if you can show May, June, or July of 19, does that count, or does it have to be standard calendar quarter, which would be first, second, third, and fourth quarter of the year on a calendar basis? That can make a huge difference because the full impact of the pandemic really was felt for many businesses starting into May and June, which is a non-standard quarter. Do we have any insight into that?
Yeah, I would say right now there hasn't been great clarity, but the way I would interpret that is it's going to follow your fiscal year. So the quarters that make up whatever your fiscal year is. Now, if you're a calendar year, that's going to be your traditional quarters, but we may have companies that are a June 30 year end or an August 31st year end. So follow your fiscal year quarters. That's the best advice I can give you right now.
Okay, that's fantastic. And then where can people get help? How can Bank of Marin and Frank, how can your firm help?
Yeah, no, we're all here to help is really the main message. The SBA has set up their own website, sba.gov. There's a tremendous amount of information there. Department of Treasury has their own website that has a tremendous amount of information. What I'm seeing from the banks that we deal with across the board is, especially as we head into PPP2, as I think it's going to be referred to, the banks will deal with their own customers first, which is pretty much how it went on the first round. And then they'll start to entertain potentially going outside of that circle. But a couple of notable things that I've heard, the expectation is the money on this round will last for roughly a month, just depending on the wave of applications. It's thought that there's probably about 30 days worth of potential funding. And there are some new requirements out there. You have to be 300 employees or less, and you have to have that 25% reduction in what they call gross receipts, which we're interpreting as gross revenue right now until we get better interpretation. So, my advice is if you had a tough time with your lender on the first round of this and didn't get the response that you thought you needed, I would start to look for the alternative sources. And some of the best alternative sources were the online ones. So, I would start researching on the SBA site. They do provide lists of potential lenders out there. So I would go and look at that. I would also talk to your CPA. If you'd like to get in touch with us, we'll provide contact information that you can put up there as well. Some CPAs have agreements, loose agreements with banks that can help with funding. And really, you want to be prepared here, but I don't see anything happening on this until the new year. So I would enjoy the holidays. I wouldn't stress. The president still hasn't signed this bill, so it's not law yet. They're still, going back and forth over a few things, but I think this is an early January activity. And my best advice to companies right now is to get prepared with the financial information that supports that 25% reduction. So typically that's going to be an internal financial statement that's unaudited. I would have that ready. And then you need 12 months worth of payroll information again. So as we're getting ready to cross over, through the end of December 31st, I would have, your calendar 12 months of payroll ready and start working on calculating that average payroll so that you'll be ready to go with the application in the new year.
So I'll jump in there also in terms of where do you get advice? So at Bank of Marin, we did open up the original PPP loan application process to all of our clients first. And once we had basically taken care of all of them, and we had 1,800 clients that got a PPP loan, more than 1,800 that got a PPP loan from us. That by the way, covered 28,000 jobs that were saved as a result. So we're very proud of what we did, and we're very happy to have been part of a solution regionally where we can help folks. But go to your bank first. If you have a loan and you're looking for forgiveness, you have to go through the bank that gave you that loan. You cannot go anywhere else. So go and knock on their door first. Some banks have opened up their portals for forgiveness. Some have not. Some have certain stages in which they invite clients. Some do not. Almost all of them have online pages of client resource information. And if they don't, you should approach them and call them and find out what the situation is. So make sure you make use of your banker and your individual contacts at the bank to find out information. If you're 150,000 and under, I would say, get the prep work done, but don't submit yet because we're still waiting to see what exactly is going to happen. The new law provides for the new PPP round to be basically automatically forgiven for 150,000 and under. But it also is looking to expand to the original PPP phase and also give those folks who had a $150,000 loan automatic forgiveness or semi-automatic forgiveness. So don't go too fast. Once this law is completely done and on the books, everybody who's got a loan of 150,000 under looks like will have a pretty easy time of getting an approval for forgiveness. So look for that and wait for that. Be a little patient.
Yeah, and one thing I want to add to that, which is a question that's probably looming out there. Do I need to file for forgiveness to be eligible for PPP2? And I think the answer to that clearly is no.
Oh.
But what's written into the bill as it stands right now is you had to have spent your money from the first round, which I think by and large most companies have. So I just want to be clear, as it's written right now, technically you don't need to file for forgiveness before you go into PPP2, but I think in case you'll agree with me, don't take your foot off the gas pedal of getting to forgiveness, but understand we're kind of back to the sprint when we get into January to get in line for money. So that may divert attention in the short run back to I need to go file for forgiveness. But as Vimke said, the key to getting money in the second round is having the bank lined up right away. The form itself, we can all deal with and we'll get there, but you have to have the bank lined up. That's the critical piece.
Absolutely. I'll say one last thing, maybe slightly off topic here, but we actually dodged a huge bullet, and not everybody who's listening to this might be aware of this. You know that the CARES Act, you may know the CARES Act was intended to be a non-taxable event for business owners. Well, that was all good and well in the way it was written in the CARES Act, but the IRS actually disagreed with the way it was written, and they issued guidance to say we're not going to simply fall over and do away with our old practices. If you use taxpayer dollars to pay any expenses, those expenses have to be added back to your bottom line, and you're going to pay taxes on those. And so that was a surprise even to Congress, who tried to change the IRS's mind and couldn't. And so now they have written into the law, into the new law, specific legislation that makes very clear that this is a non-taxable event and that all expenses that are covered by taxpayer dollars are indeed deductible, and you don't have to pay taxes over those. Now, that is true at a federal level. The great state of California is not necessarily directly on board with that. And maybe Frank, you can speak to that a little bit, because obviously this is more your area. And again,
Sure.
Advice, we're just prompting you to let you know that you should maybe talk about this or ask about this.
Correct. And so as Mike said earlier, these comments are as of December 23rd. Stay tuned. This too may change, but the state of California needs to come out and say that they're going to conform to the federal rules here. So as of now, they have not done that. I don't know if they're going to. I mean, everyone speculates that they probably will, but until they do, we just don't know. Now, interestingly enough, because this is a positive event for the taxpayer, the state doesn't have to come out and say this before the end of the calendar year. If it was a negative impact, so a potential additional tax, they would have to. So there's nothing that says we're going to find this out in the next couple of weeks here before the end of the year. So this is probably going to go into 2021 until we get a definitive answer from the state. Now, that unfortunately doesn't leave a lot of time for any tax planning if it goes into 2021. The good news is a lot of companies were looking at a potential 30% tax when you combine federal and state right now. And it looks like we've at least broken that down to a potential 10% tax on any net income that may be there as a result of taking the PPP loan effectively into income by the deduction of those expenses. So more to come on that. The thing that scares me a little bit there is the state is really low on revenue from a tax perspective. Just think about, what's going on in our local economy here. So that puts a little more pressure on this. I think a lot of people are hopeful, but until it's done, you can't say it's done, right? So as of now, it's still taxable at the state level.
Gentlemen, this has been fascinating. There are so many moving parts that business owners have to contend with. Thank you for shedding light on this for us today.
Yeah,
Mike?
it's been really, really useful helping us understand the impenetrable machinations of this huge federal program and bringing it down to a real local level. I think that a lot of business owners right now are grateful for the fact that a lot of us have the opportunity that we know our banker, because all of a sudden it's a really good thing to actually have a banking relationship with a local bank. So I'm excited about that. And I absolutely appreciate Frank's last note on the taxable situation. Makes me actually feel more relief at the relief. So thanks very much, guys. Paul, delivering another couple of stellar guests to Business in the Know. Thank you all for watching once again, and we will see you next time. Until then, keep paying attention, keep meeting new customers, and let's keep making money.